Welcome back to the Deep Dive. If you've been following the news, really any news of business or medical, you know about this GLP-1 drug market. It's the big one. These new treatments for diabetes, for obesity. It's like a modern-day gold rush, but maybe more than a gold rush. It's like this high-stakes chess game, right? Played by the absolute giants of pharma. So our mission today, it's pretty focused. We're diving deep into our sources, going to analyze the current battlefield. We really need to figure out who's actually winning this slugging match right now, between Novo Nordisk, Eli Lilly, and Pfizer. And maybe more importantly, why things are shaking out this way.
Yeah, and to really get the intensity here, you have to understand the scale. I mean, the sheer size of it. We're not talking small growth. The global GLP-1 market, it was valued around $52 billion this year, 2024. But the projection, our sources see it possibly skyrocketing to $187 billion by 2032. Yeah, that's a compound annual growth rate of nearly 17%. It's staggering. And honestly, that $187 billion figure, it might even be conservative. It doesn't fully capture, maybe, all the potential uses these drugs are starting to show.
Okay, let's unpack this then. Let's start with why. Why is demand just so explosive? I mean, these drugs, this semaglutide, the tirzepatide, they're already kind of famous, aren't they? For type 2 diabetes, yes, but also for massive weight loss, obesity treatment.
Right. But what really jumps out, I think, from the source material is how fast they're being adopted outside that core use. Get this. The number of patients just in the U.S. starting these GLP-1 treatments for non-diabetic reasons, mostly weight loss, that number has jumped, listen to this, 700% since 2019.
700%.
700%. That's a market paradigm shift, plain and simple.
Okay, 700% expansion in just 5 years. Yeah, that figure alone explains the urgency, the competition. But it keeps expanding, right? The potential uses. Our sources, they talk about cutting-edge research. GLP-1s potentially treating whole new categories. We're talking Parkinson's, Alzheimer's, neurodegenerative diseases, and chronic conditions like arthritis even, addiction.
It's incredible the range they're exploring.
So when you stack up those numbers, the potential multi-billion-dollar applications, well, yeah, it explains why these three titans, Novo Nordisk, Eli Lilly, and the challenger, Pfizer, are just locked in this fight for dominance.
Absolutely. And right now, the main event, you could say, it's the duel between the two big ones already in the ring, Novo Nordisk and Eli Lilly.
Right, the incumbents. Let's start with the Novo Nordisk. They were kind of first out of the gate, weren't they? Really established dominance with semaglutide, sold as Wegovy for weight loss, Ozempic for diabetes, and their numbers, they're just immense.
Oh, they are. Q3 sales performance, monumental. Wegovy hit $3.1 billion. That's up 18% year over year.
18%.
And Ozempic, $4.7 billion, up 9%. I mean, because of this insane growth, Novo Nordisk, based in Denmark, right? They hit this huge milestone last year, became the single largest company in Europe by market cap.
Largest company in Europe. Okay, so that sounds like a champion scorecard. But here's the puzzle, right? If they're that big, reporting nearly, $7.8 billion in Q3 just from these two drugs, why is the market kind of punishing them? Our sources show their stock performance. Well, it reflects massive pressure. The share price is actually down 46% this year.
Down 46%.
Yeah. How does that happen?
That's the critical question, isn't it? And the analysis suggests it's not really about their current sales. It's about capacity, maybe, and definitely about future expectations. See, their Q3 results, they actually missed analyst targets slightly. Reported earnings per share, $0.70 on $11.6 billion revenue. The street was looking for maybe $0.7760 on $11.8 billion.
Ah, okay. A miss is a miss, especially at that scale.
Exactly. And for a company with that kind of huge valuation, even a slight miss signals, it signals potential problems to analysts. Maybe supply chain issues, manufacturing capacity limits. Or maybe it signals that the competition is starting to erode market share faster than expected. And that fear just got worse when the company lowered its outlook for the 2025 full year. They specifically cut projected growth for their GLP-1s by 4 to 6 percentage points.
Oh.
Yeah. The market saw that lowered guidance and, it reacted pretty dramatically.
Okay, that makes sense then. And it really sets the stage perfectly for their main competitor, Eli Lilly. They seem to be just flawlessly taking advantage here. Their drug is tirzepatide, sold as Mounjaro for diabetes, Zepbound for weight loss. And they just hit this colossal sales milestone.
They really, really did. Tirzepatide became officially the world's best-selling drug in Q3 this year. Just stunning.
The world's best-selling, surpassing Keytruda.
Surpassing Keytruda, yeah. Merck's big immunotherapy drug. Lilly posted year-to-date sales of $24.8 billion for tirzepatide in that period.
$24.8 billion.
Yep. And while both companies, Novo and Lilly, have amazing products, the market perception, it seems, is that Lilly's drug might offer some, let's say, qualitative advantages, and that's driving this explosive uptake.
And you see right in the financials, don't you? The market sentiment. Lilly's stock, up 21% this year, just reflecting those rising fortunes, the view that they're handling things maybe more effectively than Novo right now.
Clear contrast.
But is that valuation justified, do you think? I mean, the market's betting so heavily on Lilly's continued success. Is their stock reflecting sustainable growth, or is it maybe riding a wave of, well, runaway hype? The kind that might correct later, just like we saw with Novo's big drop.
That's the core tension, isn't it, for the whole sector? The growth is absolutely real, no question. But the valuations are, well, they're stratospheric. But, if earnings are today's score, then M&A and strategy, that's the playbook for tomorrow. Which brings us, naturally, to the third player, Pfizer.
Exactly. Pfizer, the acknowledged challenger, kind of rushing to catch up. And their stock reflects that, too, down about 6% year to date. They clearly saw they were behind on the injectables, didn't they? Which is why their strategy seems focused elsewhere, on oral GLP-1s, pills.
That's their big strategic bet, yes. If they can make a really effective pill, something patients just take daily instead of weekly injections, well, that could unlock a huge part of the market, especially for people who are just, put off by needles.
That makes sense.
But it hasn't been easy for them. The sources suggest Pfizer's faced real challenges, getting the efficacy right, the dosing, in their oral pipeline, which explains why they're now looking so aggressively for outside tech.
And that sort of maybe desperation led to this direct strategic fight. Okay, here's where it gets really interesting.
Oh, sorry.
The battle's moved off the sales charts and into, aggressive pipeline acquisition.
Right. So Pfizer made the first big move back in September, announced they wanted to acquire Metsera. It's a clinical stage biotech developing next-gen obesity treatments. Expected price tag, around $4.9 billion.
And trying to buy their way into the next generation.
Clearly trying to shore up that lagging pipeline, yeah.
Yeah.
But then, here's the twist. Novo Nordisk jumped in.
Novo did. On the same company.
On Metsera, yeah.
Yeah.
They're now also initiating this direct head-to-head acquisition battle with Pfizer for the exact same startup.
Wow.
This bidding war over one company, Metsera, it just shows how critical everyone thinks these next-generation treatments are. It's like a land grab for the most valuable IP out there.
It's not just corporate M&A driving things, though, is it? There's this huge U.S. policy angle. It's a pricing deal that's reshaping access. Both Lilly and Novo, they struck this pretty critical deal. It involves cutting prices, significantly for their anti-obesity drugs, specifically for Medicare and Medicaid patients.
Yeah, this deal is, well, it's one of the most significant strategic trade-offs I think we've seen lately in pharma. The price cuts are huge, really staggering, but the companies agreed because the payoff was potentially massive access and, crucially, some regulatory stability.
Stability, how so?
Well, in exchange for providing the drugs at much lower costs to these huge patient groups, they got a 3-year grace period from potential tariffs. Tariffs linked to manufacturing or international trade stuff.
Oh, okay.
So that stability, plus guaranteed access to the biggest healthcare payer in the U.S., well, that's arguably worth more long-term than the immediate price cuts.
And the price cuts themselves are pretty dramatic. For you listening, the source material gives a really clear example. Zepbound's price for Medicare and Medicaid patients. It's set to drop sharply, from around $1,000 for a month's supply down to just $299.
Huge drop.
It's an enormous financial hit up front, yeah. But the context, like you said, is access. Access to the Medicare patient base, which, we should remember, is the single largest payer for health services in the U.S. Getting that access now, well, that could lock in market share for decades.
Right. So if we kind of synthesize where things stand competitively right now, the picture's pretty clear. You've got Eli Lilly and Novo Nordisk with the established head start. They're benefiting from this massive immediate demand. Lilly, though, seems to have the stronger momentum right now, better sales milestones, better stock performance reflecting that market confidence.
Okay.
Meanwhile, Pfizer is spending big trying to catch up through M&A, betting heavily on that oral drug pathway. They're definitely in catch-up mode.
So for investors trying to navigate this booming sector, the source material's conclusion seems pretty unambiguous, doesn't it? It suggests that for anyone looking to profit from this rapid expansion, right now, Eli Lilly probably looks like the better bet, just based on those superior sales growth numbers and the positive market reaction they're getting.
That seems to be the consensus from the sources, yeah. And if we connect this to the bigger picture, Why are we even talking about a nearly $190 billion market down the road? It's not just the medicine's efficacy, which is amazing. It's driven by these two big forces hitting at the same time.
Which are
One, these potential new applications we talked about, Alzheimer's, addiction, arthritis, you name it. And two, critically, this massive policy-driven patient access boost from the Medicare and Medicaid deal. That deal just fundamentally changes the number of potential patients who can get these drugs.
that unprecedented growth then, that $187 billion projection by 2032, it really forces us to think beyond just the next earnings report, doesn't it? Like, what are the long-term implications here of these really aggressive price cuts for some, these M&A battles? What does it mean for healthcare accessibility overall and for pharmaceutical innovation globally? Maybe, think about this. When a company willingly drops a drug's monthly price from $1,000 down to $299 for millions of patients, what does that signal about the future cost structure for everyone else? And ultimately, who bears the cost of funding all this accelerated innovation?
Huh?
Something to definitely mull over as this pharma arms race just keeps speeding up.